China is paying through the nose for silver, sucking out US vaults. This is the kind of move that doesn't make noise at first, just pressure. Pressure in places most people don't look. And by the time people realize what's happening, the prices have already adjusted. Check this out. If you're interested in silver, click that link in the description. Money Metals is holding this contest. They're giving away 20 Silver Eagles. Every month they hold this contest. Last month's winner never claimed his prize. We have 20 Silver Eagles just sitting here with no home to go to. Don't be that guy. Click that link I left down below. Be the next winner on that list and take home that silver. Now, look at this. In China, silver is not being traded like a chart. It's being bought because people actually need it. Factories don't care what COMEX says. They care if silver shows up on time. And right now, buyers in Shanghai are paying more for silver than buyers in the US, buyers in Europe. Not because they enjoy overpaying. No, because physical supply is tight. When silver gets hard to source, price stops being theoretical. It becomes whatever clears the market. You heard that correct. Whatever clears the market. That's what we're experiencing right now. That's what's happening in China. Real buyers competing for real metal. In recent weeks, physical silver premiums in Shanghai have traded several percentages above Western benchmark prices. Several. It's becoming clear. And this matters because price follows stress. And stress always shows up in physical markets first. In the US, silver mostly trades on paper. That's the issue, as you know. Contracts, futures, promises. That system works fine when nobody asks for delivery, but it gets awkward when physical demand heats up somewhere else. COMEX prices reflect confidence, not urgency. They assume metal can be delivered later if needed. China does not play that game. Buyers there want bars, not paperwork. That's why prices can look calm in the West, while physical markets overseas are stretched tight. Look, COMEX open interest regularly represents multiples of annual global silver production. That means price discovery is dominated by paper volume rather than physical volume. And over time, metal flows toward whoever will be paying it the most. And when that happens, inventories elsewhere quietly shrink. China isn't buying silver out of fear. It's buying silver to build things, electronics, energy systems, manufacturing lines. Silver isn't optional in those processes. When industrial demand ramps up, buyers don't wait for price dips. They secure supply and they move on. At the same time, financial stress inside parts of China's banking system has made tangible assets more attractive. That combination keeps physical demand steady even at these high prices. Silver does not come back quickly. Once it's built into products, it's gone. US vaults don't empty overnight, but their margin for errors gets thinner every time metal leaves. This isn't about panic buying. It's about pressure moving metal where it's needed most. Paper markets can stay calm longer than physical markets. They can. When those two worlds drift apart, though, price eventually snaps to reality. China isn't chasing silver. They're absorbing it. That's why we built a membership. Here's what it actually does. Members get execution alerts, not hype, not noise, just clear signals that say, this is when waiting stops helping. That alone saves people from months of second guessing. Third, we track dealer premiums for you. Spot price is only half the story. When premiums start widening or tightening, that tells you far more about real-world stress than a chart ever will. Fourth, we provide supply stress commentary, inventory behavior, delivery delays, quiet shifts dealers don't advertise. These are the things that matter before price reacts. Fifth, and this matters a lot, members get exit signals. Everyone talks about stacking. Almost no one talks about when to stop or scale back or protect gains. We do. That alone separates this from every other silver channel out there. And members get full archive access to my long-form analysis, not just 3-minute videos I post to the public. The full roadmap, 10-minute, 15-minute breakdowns on each video, how these cycles form, how they end, and how to avoid being the last buyer at the wrong price.